Sure. I think there's probably a difference between how the markets are viewing it and how the real economy is. The real economy seems to be heading towards a U-shaped recovery. I think it is going to take a while for the SME sector around the world really to recover from the loss of demand. But the equity markets are sort of looking through this, and I think they're looking through it for two reasons. One is obviously central banks around the world have slashed discount rates to record lows, and that's pushed valuations higher. And two, I think there's a generalized optimism that the end of the world may not be nigh, and that optimism I think translates into investor behavior.
One of the points that you have made in your presentation to investors is that you do not know about the global economy, whether consumers will come back. It's curious because we have seen this trade where investors are buying into the notion that you will see bookings resume in some of the airline and hospitality sectors. What do you make of that extent of that bounce back given social distancing measures and coronaphobia?
Well, I think there absolutely will be a bounce back. The question is really how much it's going to bounce back. When you look at historical experience for something like the pandemic, you really have to move away from traditional recessions, which typically hit one part of the global economy, not everything. The only analogy that you can really look at to compare it to the pandemic is something of that of a war. And wars have psychological impacts that last a long time. Now, there often precede periods of great economic growth, but there's a period of time where consumer behavior changes. And I would expect that you're going to start to see precautionary savings. I think you're going to see changes in travel patterns and behaviors, which are going to reverberate through the economy for some time to come.
Which then begs the question, Curt, and very good morning to you. If we have some pickup in economic activity, can it justify the S&P back through 3,000 and the 200-day moving average and the current multiples that we see on businesses like Amazon, for example?
Well, I think you have to be careful in terms of looking at when you look at the stock market, which part of the stock market you're talking about. I think what the pandemic has done is reinforce some existing trends. So the shift to online, whether you're talking about shopping, schooling, medicine, I think that's going to persist because that was already a trend that was going on in the marketplace that this has just really accelerated. But there are other parts of the marketplace where I think that this is going to be a structural shift, and it is going to require a derating from the current lofty valuations. So while I think that the valuations that are out there now are probably a little bit high, they may be justified for some areas of the economy, but not for the market as a whole.
Yeah, well, let's just explore that. Which parts of the economy do you think are currently overvalued on market terms compared to your expectation of how they will rebound?
Well, I think there are some safety halo stocks that have done very well. That while I think that if you have a long-term time frame, you will grow into these current valuations. I would expect that as things begin to normalize, you'll see a little bit of a setback. Obviously, the tech sector is one area that's done very well. I understand why it's done well, and it's been sort of a safe haven for a period of time. I think if you have a long enough time frame, you'll be able to grow into current valuations. But between now and, say, the beginning of next year, I would expect a correction